to you. Today is Wednesday, the 27th of April. Wow, we are at the end of April already, almost. My name is Francisco Gaffney, and this is my daily streaming all about governance, risk, compliance, and advisory boards. So this is the things I want to talk today is actually throughout this week is a very common risk. And I say, oh, Monday, do we need to start with a negative? No, it's a very positive thing. It's a risk that we identified. And actually, this is coming from 4 meetings or 4 engagements that I had in the past month, meaning from late March and the month of April with 4 different companies. And this is a basic risk that all of them have, and they are very hard to recognize, particularly for companies where the founder leads the charge to growth and decides that his story will make it happen, right? This is a risk. Say, I know what I'm doing. I'm going to plow my way. I'm going to get it. Now, this is what I want to mention this week. I want to turn that into something more useful, because what I identified, and we identified this many, many times, particularly if you're in investors and you receive pitch decks all the time, is this problem when the founders or the founding team now converting into executive team or the board of executives supports an enterprise that want to scale, and unfortunately they have the wrong sequence and the wrong things in place that they promote and demonstrate or try to demonstrate why they deserve. And I say deserve not in a bad way, but the capital at the end is awarded to something that actually is evidence, right? So this week I want to put a 90-day board action plan, not a theory, not a pretty model, but a simple working plan for boards, for founders, for executive teams who need to move from belief and very strong beliefs, some of them, to evidence, right? And there are many things in terms of evidence that is not just the sales. And I'm going to mention some of these things are red flags right away when you see a pitch deck. So today, in the model that we are familiar with is the advisory board operating system. I'm going to pull it now in front of me. We're going to talk about brands, people, partnerships, and the commercial acceleration. What the people are looking into make very exciting when they pitch for capital. But this is the things that you are start to hear, and they say, okay, we have to be careful here. What we are hearing probably need to be redefined and needs a bit more of evidence, right? So here's the situation. And I'm going to make an anonymous average claims that I heard in this particularly in these 4 companies I've been talking to, the owners and the executive boards. So a founder has built something real, right? This is not something that actually we have an idea. No, this is something real. The product works, the services works, the customers have bought it already. The market is showing interest, which is remarkable. So the founder looks at the board and the executive team, or goes to the market himself, completely convinced and says, we are ready to scale, right? And the pitch deck is very, very good, very strong. And you can see why. The company has a tight, efficient team, remarkable collections, increased revenues, historical sales, a big plan to enter larger markets and to raise capital. That's not the weak part of the story. But this is exactly why it's risky, because it's not showing what is underneath that. Because enough is working to make the founder believe that the next step is obvious, right? But the scale is not obvious. The scale of the company had to be tested. And here I'm going to mention a few red flags that if you have that in your pitch deck, please pay attention. The risk I want to talk today about is the false scales, right? When you think that you are ready to scaling, but actually you start to see already in the pitch decks some red flags. And red flags is not a negative, is things actually have been proven year after year after year that particular area need attention, and that's the purpose of this exercise. So When you start to identify that a full scale sounds like is when you hear these kind of things or you start to read these kind of things. The market wants it, right? So you can disguise this same phrase in many ways. That the market demands increase, and we have this. That's fine. The market wants it. Doesn't mean that actually we have a backlog of orders sitting in our operating systems or CRMs, right? The market wants it. It's just the market wants it. This desire, it doesn't mean actually activity. So the other thing that you hear is the product is better compared to what, right? More features and more things, more shiny bells, it doesn't mean that it's better. It means actually it's your perception of what is better and what is not better. So you have to be careful with these kind of statements. And the thing is actually remember what happened with Steve Jobs back when he came back to Apple in the 90s. He reduced 75% of his production line because he was competing against features head to head with all the other companies in the market. So they say, we don't need to compete feature to feature. We are going to focus on the things that are important for the customers. The other thing is actually that you hear this and then immediately you have to pay attention because this is a no, if you may. The category is new. And guess what? I'm not going to elaborate on that one, but when you hear the category is new, or you have in your pitch deck or in anywhere that your category is new, that is a massive risk because you haven't tested that enough in the market to say, oh, we are a new category creators. And you see so often that in the pitch decks that you are wondering why the people doesn't get it, because a new category requires proof, requires evidence, requires a lot of things to demonstrate that actually effectively is a new category, right? So be careful with this wording. So the only thing that you're going to hear is we only need more people, more partners, and more capital. Right away, you say, listen, we need to stop here for a second and consider this, because having more things on the table, it doesn't mean that actually it's going to scale. But all this sounds very positive, right? So it's very interesting, but you start to see that actually all these patterns already have been repeated in the past and they haven't produced the result that were promising. So in the boardroom, I should make this kind of words, or when you're making this decision or when you're building these pitch decks, you should pay attention, because more market interest doesn't always mean that the business is ready. And here's where I come in as a board advisor, right? I put together rotating international advisory boards around the milestones in front of your company. So the organization gets the specialist capability needs in a fraction of the time that takes to hire one executive, without the big consulting overhead, without the talent locking, and with the members swapped every 6 months as the project evolves, right? So this is what you're looking for. So if you're scaling, you need evolution, you need things moving, and the right talent at the right time, not a static board of advisors or teams that actually will be the same thinking for ramping up, go to market, and operational expertise and distribution. So these four different teams that have different expertises, right? So if you have a static team that can say, yeah, we go and break through, that's not the same team to operationally make efficient that breakthrough, right? So back to the founders or the teams that are coming and saying, yes, we can go and we have all these things actually indicates to us that we are ready to scale. There are three problems. I'm going to mention them very specifically here. First is the founders can mistake interest for scale, that I briefly mentioned earlier. So interest means that people are curious. It doesn't mean that actually they're going to buy right away and the company is going to scale. And scale means the business can sell, deliver, support, report, and repeat without chaos, right? So you say curiosity doesn't mean that you have the infrastructure to do that. And this is just the sales operation motion and delivery. And then you have the other motion that actually you have to we're going to discuss this week, which is the company infrastructure, the tax processes, the legal requirement, the certifications, the setting up the company correctly, so this is easy to invest in, right? So there are many things actually you are missing with that interest and curiosity compared with actually what that means. So in the examples I mentioned earlier, the companies were sold thousands of units, some of them, but it's still small. So the board and the executive team and the founder um, need to test whether the model works without their heroics, right? So that means testing the sales processes, the customer support, the delivery, training, reporting, and partner handling. And this is one of the things, actually, sometimes I give a very simple example. If you're a manufacturer and you're going to a trade show and they say, well, say founder dependency, I'm not going to anywhere. I'm not going to 30 days holidays and the company is still running. Yeah, that's true. You're not going anywhere. But if you're going to a trade show and you have two trade shows, one better than the other one in the same country, not even talking about different countries, if everything depends on you because you know what you're doing, you know the story, you have very convincing and very persuasive in terms of actually why your product is better, why you do this agreement with these companies, which trade show you are going to go, right? Because you are the only one that can do that. So if you're absent in one trade show, you're already absent. So you have a problem there right away because what you have in your head, what the convincing, the energy, the capacity, the pull through of all these stands when you talk to customers or partners or merging of activities, etc., etc., joint ventures, is not the same. Can you transfer that to somebody else to do the same job that you do or even better? So that's a big problem, right? So can you scale now? No, unfortunately, not. When I speak with these four companies, they cannot do it because everything depends on them. That's your problem, right? The second problem is the brand may still depend too much on the founder. This is exactly the problem that I mentioned here. So the founder can tell a story with energy that is useful, but if the brand only works when the founder explains it, so there you have a problem there. And the third problem is the partnerships can make the company look bigger before it is stronger. So let's assume that these companies, and this is what happened because one of the companies got very scared when we spoke with them. They say, we can connect you with this kind of distribution. And they say, we don't have the capacity now to manufacture at the speed of their demands. So is that scalable then? So you start to understand what I'm saying. So is having a very, very interesting story and the track record up to this point, it doesn't mean that your company is ready to scale. So a new partner can open doors, but poor partnerships also, and this is the opposite side of the equation, lead to weak pricing, reporting, servicing control, and customers ownership. So the board should not ask who can get us into the market. It should ask who help us scale with control, right? So perhaps a smaller partner and making more or a better process with you control is a better partnership than going to a large distributor and then falling too small for them. That is a kind of a very frustrating thing because you are burning your bridges there. So, in other words, imagine that scale is like moving from a small office to a bigger, full floor open plant. So, the extra place looks fantastic, is beautiful, is amazing. But if the team and the systems and the roles are not clear, the pieces just spreads the mess over a larger surface, right? So the board and the executive team, and especially the founders, have to ask a better question. What must to be true in the next 90 days before we call this a scaling, right? As a board advisor, I would propose to consider the following. Number one, build a brand proof sheet. So it's a one page only. What is a promise? What proofs supports it? Who believes it? What objections keep coming back? What does the founder need to explain to the market that it does not yet understand, right? The second thing I suggest is a build a people capacity sheet. So who owns the sales? Who owns the delivery? Who owns the support? Who owns investor materials? And who owns the risks? right? Because when you're expanding, you're scaling, you're growing, there are many risks. So you have to name who is responsible for, accountable for all these risks. And who is the backup if you as a founder, you are away or cannot assist at two events at the same time in the next 30 days. That one question usually tells you to the boards and your executive team, and especially the founder, a lot. So if you cannot be at two places at the same time, who is going to do it? And the third thing I would suggest is build a partnership control sheet, as I mentioned earlier. List the top 5 partners or target partners, and then ask these 4 questions. Do they improve access? Do they improve margin? Do they improve control? And do they improve credibility? So if the answer only is access, the partnership is enough, because you need the margins, the control, and the credibility too. So not just the next thing is just to go and distribute everywhere else. You need the control, the margin controls, and the credibility. So what is the next challenge then? Who helps the board, your executive team, or especially you as a founder, to do that quickly without turning into a 6-month consulting exercise that actually is very expensive, or you going to the market by yourself and 9 months later coming back and saying, we need help because we actually run in circles here and we are burning money, we are burning runway money, and we are not getting anywhere because you don't have the right things in place to demonstrate, to make it evidence for investors, to the markets, and to your customers and to your supply chain that actually this is a scale. It's not just a because they like it. It's not a wish. It's not a desire. It's not curiosity. It's something that is evidenced that actually is going to work. Now, this is what you gain working with me. 3 things: business outcomes, differentiators, and risk reductions. In terms of business outcomes, I work with boards, executive teams, and especially with the founders to turn that ambition into a 90-day scale readiness plan. That means the company moves from the we think the market wants it to we can prove the brand, our people, and our partnerships are ready to carry the growth, right? There's a very different distinction there. In terms of differentiators, I build a rotating international advisory board around the live milestone, where we are going next. And for particularly this stage, that means people who know market entry, commercial acceleration, brand transferability, partner strategy, and board level execution. So that you have that for the next 6 months, 90 days. And then we say, well, we need another skill so we can swap people or members in the board advisory boards to satisfy those skills that are required at that stage, right? And in terms of risk reduction, the models reduce the risk hiring one the risk of hiring one expensive executive too early, paying a large consultancy to learn slowly, or to leave the founder to carry the full scale story alone. So that I reduce all that risk. So the board gets a target capability, and the capability change as the project changes, right? Well, so one action you can take home today, and it's doable in 30 minutes or less. Before your next meeting, ask for the one-page scale readiness scoreboard, right? Or scorecard. These have 3 things only, right? In the brand, the people, and the partnerships, you have these 3 columns: brand, people, and partnerships. And then you ask these questions. Mark red, yellow, or green if the sentence who is ready in terms of branding, in people and partnership, and what who is ready, it means the evidence. What evidence we have that the brand is ready to scale? What evidence we have that the people are ready to scale? What evidence we have that the partnerships are ready to scale, right? So if you don't have that all 3 in green, probably you have to step back and say, okay, let's reconsider this, because effectively the demand, the curiosity, perhaps it's not means that doesn't mean that this is a scale. It's just pretty much a how it's called, a peak on demand and nothing else. So if you're a founder, an executive team, or a non-executive director, or a CFO, CEO, and you're looking to grow, and you need a scale, and you're in your organization looking to test the scale readiness, prepare for capital, and build the right capabilities around the milestone in front of you, let's have a 30-minute call so I can understand where you are today, what you want to achieve, and how a rotating international advisory board can help you move faster without hiring a permanent executive or paying the big consulting overhead. So let's reconvene tomorrow, because tomorrow I'm going to move from scale to money, because the next question is whether the numbers, the assets, and the partnerships are strong enough for capital to trust. And what I mean is, actually, are the investors going to pay attention to you and they're going to invest in your organization when you have all these assets and partnerships ready to move to the next stage? Fantastic. Have a great day, and I'll see you tomorrow. Thank you. Bye-bye.